we're going here. As you can see, the Ramsey show is over. Just ended 30 seconds ago. So we'll get rid of that. And we usually wait a few minutes for people to get over there. Not that many people in there today, and probably won't be that many people here either, because of the Labor Day holiday in the United States of America. But we'll see. Some people do watch it not live. Let's see. And so I put stuff in the chat while we're waiting. Schedule a free financial coach consultation. Oh, spelled it. Almost put consolation, which is a different thing. Consultation/assessment. What up, Flash? My day is going excellently. Thank you for asking. How is yours? Free consultation assessment at https ramseycoach.com/coach Steve Money. There we go. And you can click on that link. It's at the top of the chat. Or you can just type in ramseycoach.com and it will repopulate to the secured, the HTTPS. So you don't actually have to put all that in there. Let's see, what did I get? Hey, message from my son. And yes, I check my notifications. Because I'm keeping it real, yeah. Flash's day was pretty chill. Headache, but now back to work tomorrow. Yep. Well, get rid of that headache before you go back to work is what I would advise. And I'm a Ramsey preferred coach, so getting rid of the headache is pretty good. My son and I just started watching he's seen the whole series before, but the Star Wars Rebels animated series. Watching that because characters from that are showing up in the new Star Wars stuff, like the Bad Batch, also animated series, which is basically like a Clone Wars sequel. They all are. That's right, Coach's Orders, Flash. And so, but there are also going to be live action characters from there in the Ahsoka series, and possibly even the other ones, Mandalorian, Andor. They got a bunch of stuff coming out between Marvel and Star Wars. They have a bunch of different stuff coming up on the thing there. The Disney Plus is what I was meant to say. Let's see, didn't want to show that yet. I need my notes over here. All right, let's get started. Sorry for the delay. Episode 101 today. And we start with the song. Oh, they got me three copyright claims on Friday's 100th episode show. Somehow 2 different ones for the Love Yourself parody, the Baby Steps song that I do to the tune of Love Yourself, written by Ed Sheeran and performed by Justin Bieber. But I made a parody, and so on the 100th episode there is a version of the complete song. I'm not going to do the complete song today though, so you can check that out. But yeah, they got me a copyright claim for that and for Sail On Sailor, but they never, Rebecca Black is cool, she never gets me for doing Friday, which I do every Friday. Alright, so we get a cappella today, and I will just do the bridging chorus. Here we go. His name is Dave Ramsey, and this is his plan. And I hope to meet him, I admire the man. I've messed up in my life, but these steps have made it right. That's why I coach, and why I host this after show. If you don't like results you're getting now, you should do the baby steps. If you want to have financial peace, then you should do these baby steps. Ba-da-ba-ba, ba-da-ba, ba-da-ba-ba, ba-da-ba, ba-da-ba-ba, ba-da-ba-da-ba-ba-ba. Live from Columbus, OH, it's the Ramsey Show Aftershow show, brought to you by Tina Scher, the Queen of Sheba. And here we talk about the Ramsey Show YouTube chat, and the people in it, and all things financial, and whatever else I want to talk about. I'm your host, Coach Steve Money. I'm a certified Ramsey Solutions financial coach, also Ramsey Preferred financial coach, and you can schedule a free consultation assessment by either emailing your contact info to coachstevemoney@gmail.com, or you can just go to ramseycoach.com/Coach Steve Money. That is part of Ramsey Solutions website there. And you can reach me on Instagram and Twitter at Coach Steve Money, no spaces. If you'd like to donate to the channel like Tina Scher did, so I can make it better, you can hit up paypal.me/Coach Steve Money. Alrighty. Check on the chat. What up, Spring? Thanks for coming by. Appreciate it. What do we want to do? Oh, first, channel update. So exciting, so exciting. So 100th episode on Friday that we did. And I say we because it's not only me, it's you guys too. Anybody that watches is part of this. As of Sunday morning, yesterday morning, I hit 1,000 hours watched. And so you have to have 1,000 hours watched in order to meet the eligibility requirements. You have to get that total within a year. So it doesn't like end like from the time I did my first video to 1 year from that. It doesn't end, but just in a year's time. So it can be like a month after I started to a year from that time. And so that doesn't look like that's going to be a problem, because I will be doing even more videos now that I've moved and I've done all the Ramsey coach training and all that stuff. And so I will be having more videos out there. The problem will be the subscribers, so please subscribe if you have not. As you can see, 1,000 is required. I have 68. So in order to get monetized by YouTube. Have to meet those requirements. And so the only way I can't get super chats until then either. The only way that I can receive any money is through viewer donations at the PayPal link right there. Alrighty. Today's Ramsey Show hosts on a replay for Labor Day were Dave Ramsey, author of the Total Money Makeover, book that changed my life. My chair keeps sliding down for some reason. It's a pretty new chair too. This book kind of changed my life. I mean, I listened to him on the radio, but this book definitely gives you all the keys that you need there. And so I highly recommend that. And also Ken Coleman was the co-host on today's replay, and you can pre-order his book, From Paycheck to Purpose, The Clear Path to Doing the Work You Love. And thanks to a Labor Day chat visit from George Camel, host of the... Where did I put that? There it is. Host of the Fine Print podcast. We know that he is scheduled to host with Dave on Wednesday and with John on Friday, so it looks like I was incorrect, which I have no problem being incorrect about this, about there being Labor Day week vacations for the crew there. So that's excellent. So George and Dave Ramsey on Wednesday, and George and John on Friday. And of course that's scheduled. It could always change. On the Fine Print, the episodes that he has out so far are the true cost of credit cards, TurboTax is screwing you, and going PG-13 there according to King Coleman. Bulletproof Your Money in a Pandemic, and Buy Now or Pay Later. Alrighty, let's check on the chat. Need 3 monitors so I can have the chat up all the time. Alright. Market report. Market is closed today, at least in this country, for our Labor Day holiday. But it is not elsewhere, and you can see everything is up in the Europe and in the Asia. As far as currencies, maybe we should close more often because as you can see, the US dollar is up on the euro, up on the yen, up on the pound, and up on the Canadian dollar, and up on the Australian dollar. Now, why they have these like this, why like the US dollar wouldn't be first and then it would show whether it's up or down on there, I don't know. But some of them it leads with US dollar, and some of them it leads with the other country. So, but anyway, dollar up all around today. And crypto, that's still being traded. That doesn't close, so that is active. Let's see, any earnings, interesting earnings. GameStop on September 8th. Progressive Corporation, I assume that's the insurance. Alright, but I think that's all we have there. Talk about some articles here. Market Bull Tom Lee, this on CNBC. Market Bull Tom Lee predicts a record September, but warns that a 10% correction could come in October. And they always do this. They always predict. People always predict. Oh well, correction's coming. correction means a downturn, a decline. So 10%, is significant because that is, after all, a year's worth of return that you should be getting. Dave Ramsey says average is 10%, 10 to 12%, and he doesn't say that's also true. That he says documented fact that the S&P 500 index gets 10 to 12 per year average. So, that is a significant amount. To compare it, if you want to compare it to something, if it would go down that by 10%, you could compare it to the Pandy crash, which that went down 33%. And that's why, and hopefully, when it did that, you didn't cash out, because then you lost that money. Hopefully, you kept buying like I did, and then now your gains are way up because of that, and will continue to be way up, higher than average for some time, because if you bought when it was down. I don't think there. Let's see. I'll just skim it. See if there's anything interesting in here about why, but let's see. He thinks it's going to be 100 points. S&P 500 going up 100 points this month. All right, which will, the 100 points itself will not be 10%. So if it's going to lose 10% after it goes up 100 points, that will be more. But he said, we didn't think there was a window for a 10% correction for most of 2021. The window where we think could start to have potentially a 10% pullback is October. And they always say pullback. He's saying we get that much closer to tapering, which is when the Fed stops buying as many U.S. bonds. So that's why it would be. He thinks there would be going on an upheaval in the bond market. It typically spills to stocks. But in the meantime, Lee indicates he would be a buyer. So even regardless of that. Let's see, the U.S. is still in an underlying expansion. This is a risk on formula. He cites crude oil price comeback and Bitcoin's return above 50,000 as evidence. My guess is that quite a number of investors thought we'd have a 10% correction in August, which didn't happen. We got record highs. So money was taken off the table. Usually when people re-risk, they start buying cyclical and epicenter ideas. Yeah. All right. So that means, if you're up, that basically means if you're up money, then you're going to be more, you're going to go towards the middle. You're going to be less risky, basically. So he believes the S&P 500 could exceed 4650 in September, and one analyst thought that it would close at 5,000 in December at the end of the year. So we'll have to see. Disclosure, he owns Bitcoin. All right, that's good disclosure to have since he mentioned it. All right, let's see what else we got there. Oh, check on the chat. Okay. No, not expecting that many people in the chat, so that's less chatter in the chat. That's all right. Happens. Holidays happen. Let's see. Oh, missed the. There it is. Social Security benefits face reduction a year earlier than expected due to pandemic. Social Security and Medicare, the government's two biggest benefit programs, remain under intense financial pressure with the retirement of millions of baby boomers and a devastating pandemic. Social Security will be unable to pay full benefits starting in 2034, a year earlier than previously forecast due to the impact of that crisis. That's according to a new report from the program's trustees released Tuesday, which moved up by 1 year the date for the depletion of Social Security reserves. Medicare is still expected to exhaust its reserve in 2026, the same date as estimated last year, which is in 5 years. So, personally, I think Congress will do something about that, and I don't know if they'll have it, still paying out and be in a deficit or something like that. I mean, that's just more national debt. But I don't know. I think they'll address it somehow, rather than just like start not paying, like I think they did in Greece or somewhere. And I don't think that went too well. This from the Motley Fool: should you invest in AMC stock right now? And of course, we do not recommend single stocks. Mutual funds is what we recommend, and so if your mutual fund has AMC in there, all right, and I think that would be a small cap or mid cap. I don't think it quite qualifies for a large. Let's see. So the key points: AMC stock price is detached from operating performance. All right, and I'll tell you what that means in a second. Movie theater attendance is declining, absolutely. And the coronavirus pandy is constraining operations. And, So what the stock price is detached from operating performance, that means that people are buying it not based on the operating performance. They're buying it, a bunch of people, not everybody, but probably a bunch of people are buying it because it is one of the Reddit stocks where a group of people decide they are going to buy it and keep this high, and then the hedge funds that have it and bet that the stock is going low, then they either have to have losses or they have to keep buying it as well in order to hedge their own hedge fund losses. And so that's basically that there. So it's an inflated price due to just because that's what people are deciding to do, not based on the operating performance at all, or like they think the company will make more money. That has nothing to do with it. It is just one that they decided to buy. Let's see. My son and I saw, speaking of movie theaters, not in an AMC. We went to, where did we go? Marcus Crosswoods. Has the chairs, where the reclining chairs, motorized. Awesome. We went there to see Shang-Chi and the Legend of the Ten Rings Marvel movie. It was excellent. Let's see. Why AMC stock keeps climbing higher. Let's see if I said this already. While it's slowly bouncing back, the company is still losing money every quarter. There's no telling when or if the company will generate profits on the bottom line, right? Yeah, rising stock price, little to do with operating performance. Since AMC generates nearly all of its revenue from people visiting theaters in person, the coronavirus pandemic was a catastrophe. What's more, AMC still had to come up with the rent payments to its theaters and interest payments to its lenders. This is also why you don't have loans on your business. You operate on a cash basis. Management has since negotiated some delays to those payments, but they are still accumulating, and those negotiations and delays, that means more interest paid probably. So that doesn't fix the problem really, that just delays it. Let's see. Here they're talking about the alternatives. You can subscribe to the Disney streaming bundle. And probably because of Scarlett Johansson's lawsuit over, what was that movie called? Black Widow, which released in theaters and on Disney Plus the same day, therefore costing her money because she only gets points on what it does in the theater. Probably movies will not be, at least for the time being, will not be released the same day as in theaters on Disney Plus. So I think Shang-Chi is supposed to be on there on the like 3 months after release. So just came out last Friday. So you can start your countdown now if you want to see that for free. I know show sponsor Tina Scher is waiting for that very sound advice. But my son and I, that's like the only thing my son and I do for fun, like it costs money like that, is to go see action movies and stuff in the theater. But anyway, the verdict: the current operating environment from AMC is severely constrained with the deadly virus still in circulation. Over the longer run, the secular popularity of streaming services and the increasing quality of the home viewing experience is bad news for AMC. Looking at the company's business prospects alone, you should not invest in AMC stock right now, right? And the only thing that you would do that if you were playing the game with the meme stock people and just trying to get it as high as you can, and betting that the hedge eventually some of the hedge fund people have already sold off and they've just taken the loss and left there, and that's why it went down and it was flat for a while. But every once in a while it does pop back up. Spring says, it's always seemed to me that the stock market is more based on emotion than anything else. Absolutely, emotions and sometimes fears, sometimes optimism, because if the traders that are trading individual stocks, if they think something is going to happen, they make moves, they sell or buy, and then that causes what they think is going to happen. So it's like it's almost like a house of cards that way. But yeah, that's basically, that's right. A lot of emotion involved. Let's see what else we got. Oh, from Yahoo News, a Missouri restaurant worker used the labor shortage to get a new job at Domino's, win a quick promotion, and buy a second vehicle, a report says. Now, I'm on board with the second job. I'm on board with the promotion, spending that money right away, and probably leasing or getting the vehicle on a loan, which I don't know that happened. Let's read it and find out. But that would be a bad idea, though. Some workers say they are seeing better career opportunities. I don't know how good you guys can see that. Let me pop that up there. There we go. Some workers say they're seeing better career opportunities in a tight U.S. labor market. That's right. There have never been more jobs available. A Domino's worker in Missouri said he secured a speedy promotion and more pay because of this. And sure. Experts say employees have the upper hand for the first time in years. Somewhat. The tight labor market in the U.S. helping some workers secure better paying jobs and win quick promotions. Keith Lane appears to be among them. Lane told the Missouri newspaper, the Springfield News Leader, that he was laid off from his job at... Oh, they didn't say he was laid off. I thought he took it as a second job. From his job at McAllister Deli at Springfield Branson National Airport early in the pandy, and was out of work for 4 months. He later returned to McAllister's briefly, but then secured what he said was a better job at a Domino's location in Springfield. Okay, I did not, I didn't, had not read, excuse me, had not read this, and so I thought that he got a second job. So let's read on, see what else happened. According to the paper, Domino's promoted Lane to assistant manager within 6 months. Well, he must have been a decent employee then. Lane said this helped him buy a second vehicle using the cash he pulled in from working the extra hours that were on offer. Okay, well, if he bought it cash, no problem. That's excellent. Lane and others have taken advantage of the tight labor market by switching out of lower paying or less desirable jobs. Some are even rage quitting in anticipation. I'm not even. That's a link there because that's a trigger word for you to get to click that. Not getting that. Sometimes I've had on here I have clicked on a couple because my curiosity got the better of me, but I know what rage quitting is, in anticipation that plenty more job opportunities exist, and they do seem so today, but this is not Pandy exclusive. Somebody being able to get a better job that pays better money. That's been happening forever. So, all right, so I feel better about this because I thought at first, like I said, I thought that it was just a second job, and then I thought he would have taken out a loan for the new vehicle. But cool. We bought it in cash. That's so excellent. There's nothing non-Dave happening there. All right, this from Slate.com. The government absolutely should not subsidize Elon Musk's satellite internet venture. Obviously, this is going to be an opinion on here, but I just thought it was an interesting story. The huge infrastructure package that recently passed the Senate allocates billions of dollars for expanding affordable internet access nationwide, raising the question of who and where should get that money. No recipients have been named yet, but low Earth orbit satellite networks like Starlink might be one option federal agencies, state, and local governments consider. When did this come out? September 6th. Infrastructure package that recently passed the Senate. It has to pass both houses to be law, and I thought it did. I thought they had an infrastructure bill. Of course, packed with all other kinds of stuff as well. You know how they do in the Washington, D.C. Right. These networks have recently gotten attention for their potential to connect people in rural areas too hard to reach or capital intensive for terrestrial service. They're also getting attention from angry astronomers who don't want their views of the night sky ruined. The technology is promising enough that one of these networks, SpaceX Starlink, won $885.5 million in federal funding in 2020 from the Federal Communication Commission's Rural Digital Opportunity Fund. And yeah, if it could also lead to, that would be more competition as well in the internet service provider game. So I don't see a problem with that. But as far as the government paying for something that SpaceX wants to do, which is owned by Elon Musk. Let's see. Service currently costs $99 a month with a $4.99 upfront cost for equipment. Deposits for pre-order are fully refundable. Alrighty. Well, yeah, that's not as easy as you get. It's not as cheap as the cable internet. But if you're out in the middle of Montana somewhere, maybe you can't, get it. Maybe you can't get good internet. out there, and in that case, it might be worth it for those people. But as far as the government paying for it, the article goes on to say the government should also continue making internet service affordable through aggressive support of existing federal programs like Lifeline and the emergency broadband benefit. High prices affect everyone, not just those in rural areas, but also low income, black, brown, and other people of color in cities, as well as the indigenous and those living on tribal lands. Yeah, so yeah, they just don't think. They just don't think. They think. I guess they think he has plenty of. This person that wrote this article thinks that he has plenty of money there, but the government has spent money on far, far, far more stupid things if they help pay for that to happen. All right. Speaking of COVID, resurgence clouds business travel rebound. This is the Wall Street Journal, so we only can read this much of it. But basically, companies are delaying sending employees back on the road this fall amid another surge in coronavirus cases. Airlines and hotels had hoped that business travel, one of the most lucrative pillars of their business, would start to bounce back in the coming months. Those hopes are fading as the busy summer travel season peters out and the spread of the Delta variant of the pandy postpones some companies' plans to return to offices and resume in-person meetings and whatever the rest of the full story says. But you get the bit. You got the gist. If you're another stock article, and again, do not confuse this with endorsing single stocks. I don't. Mutual funds, because you do get these companies, but this just gives you an idea what is going on with some of the stocks in your mutual funds. Okay, and these are 5 blue chip companies. So if you have these would be in your large cap mutual funds. So if you're retired, considering buying these 5 stocks, and I did read ahead on this one, I skimmed ahead. What this focuses on is the dividends that these 5 pay out. I need to fix my chair. Key points: retired investors need to protect their wealth as much as they grow it. The ideal retirement stocks pay reliable dividends, have dominant businesses, and produce steady growth. In this low interest rate environment, retirees can still thrive with a sound investment strategy. Vital to protect your nest egg during the golden years. You don't want to stress over risky stocks. That is true. You never have to stress over risky stocks if you have mutual funds, by the way. But anyway, these 5 blue chip companies could be just what you're looking for. Number 1, McDonald's. 39,000 locations worldwide. However, the company generates most of its revenue from the rent paid by the franchisee who operate its restaurants. I did not know that. Yeah, because they own just a small portion, I believe, of their of all the locations. Fast food is cheap, quick, and the Golden Arches are an iconic brand across the planet. So McDonald's has thrived for decades through various economic environments. It pays a dividend that yields 2.2% as of this writing, and management has raised the payout for 46 years and counting. So that means it's always going up. Analysts expect McDonald's to grow its earnings share at an 8 to 9% rate moving forward, so the stock offers solid growth. All right. Also, Johnson & Johnson. Spring says her church has suspended in-person worship again. Yeah, the employees have had to, actually most places employees have had to wear masks again, um, vaccinated or not, and Canes, for example, they never opened up in restaurant dining. They never did that, but they did allow you to go in there and buy takeout, and now you can't do that again. Drive-through only for the Canes, at least here in Ohio. Johnson & Johnson would be the second one, and basically dividend yield is 2.4%. So obviously Johnson & Johnson, pharmaceutical drugs, medical devices, and consumer products. They make tons of stuff. Business generated more than $20 billion in free cash flow in 2020, which helps fund a dividend that has increased each of the past 59 years. 59 years is a decent track record. And they're projected 7% to 8% rate moving forward. Procter and Gamble, same as Johnson & Johnson, they make a billion different things. Wide variety of consumer staples and household products worldwide. Shampoo, laundry detergent, toothpaste. Items consumers buy every month are automatic buys they don't think about. The company turns 20 cents of every dollar of revenue into free cash flow, which amounted to $15.8 billion in its fiscal 2021. With that cash, Procter and Gamble pays a dividend that yields 2.4% on the current stock price. All right, and they're projected to go forward at 7%. 3M company, they make a bunch of stuff as well. Products range from adhesives and films to post-it notes. Industrial companies can be cyclical, meaning their performances fluctuate with how the economy is doing, but 3M is so diversified that it handles the ups and downs of its end markets fairly well. For example, the Pandy hurt many of its end markets, but the company makes respirators, masks, in case you didn't know what respirators were, which offset the decline of its other businesses. So they are well diversified, just like the mutual funds diversify you so you don't just have single stocks. Dividend yields 3.1% and projected to go 9 to 10%. Verizon, telecommunications company, operates the second largest wireless network in the U.S. Verizon pays the most generous dividend of the companies on this list, with the stock yielding 4.6% dividend. The company has increased its payout for the past 17 years and could easily continue to do so, since Verizon is expected to grow earnings per share between 3 and 4% each year moving forward. So the growth percentage is lower here, but I'm assuming the dividend payout is why it would be recommended over the first largest wireless, which I do not know who that would be. Would that be AT&T? Perhaps. Bottom line, retired investors stand benefit from holding shares of these dominant companies in their respective fields with steadily growing dividends. Still increase your wealth during golden years. Yeah, so basically this is basically something how you have your money invested in something fairly safe, which the mutual funds are even safer than in even these single stocks, which are a pretty good bet, I think. But the idea that this article basically goes is on the dividends, which means that pays that out every single year. So that means people that are retired, they're closer to the end of life, and so they may need that extra money every year. Spring says she was on her way from home from Ohio. Hope you enjoyed your time in the Ohio, Spring, and stopped by at a McDonald's. Gasped when they had dining available. Yeah, the McDonald's is still, I believe. I haven't been in one in a long time, but as far as I know, I think McDonald's was one of the first to open back up as well. Alrighty. Back to notes. Upcoming streams. I think I said something about maybe doing some this weekend. I didn't do any. I did. I played my daughter's boyfriend, Justin. I played him in the Madden, and he was the Dallas Cowboys, and I was watching the football team, and he kicked my butt. I don't remember what was the score. 35-21. Yeah, so 35-21. So that's if you're wondering. You can still watch it though. We talk about some, football stuff and football players and stuff like that on it if you're interested on that kind of thing. And we will probably be playing that again soon. I have to change I have not played against a live person in forever, only playing against a computer, so I have to change some things about the way I'm playing there. And as you can see, the fabulous 100th episode of the Ramsey Show right there. Anyway, the Ramsey Show Aftershow show, brought to you by Tina Scher, the Queen of Sheba, is on every weekday at 6 p.m. Eastern Time, right after the Ramsey Show YouTube video ends, even when it's a replay, like it was today on Labor Day. Board Gaming with Stephen Glenn. He is back. He's a substitute teacher, and he has been subbing, and so he's been busy. So I believe Board Gaming with Stephen Glenn on, even though it says right here on my notes, most Tuesdays, but probably that may be on a hiatus for a little while. We'll see how that goes. So he's the one that drives that and picks the content for that. So if it continues to not happening, I will probably have a Tuesday night stream, not podcast, but a stream of some type to replace it. I will usually start a live stream just for chatting if the Ramsey Show mod has not posted that day's show by 10 a.m. Eastern Time, as was the case 7 times in the past month, which is a lot. It's not normally at that much rate. The mod normally has it up early. Father-daughter video gaming. I did a test with Justin before we played, after we played Madden. I did a test with him about trying to get it to see the other player's controller on Steam's, what's it called? Remote Play? Yeah, Remote Play. And it would not. So one of us, we'll have to see if either of us, me or Bella, can control the player well enough, the robots in Portal 2, see if we can control them well enough with the keyboard and mouse. So, which is not as easy as using a gamepad. So the reason that one has a problem, I believe, is because the game itself, you're trying to fool the game into thinking that the other person is right there because it's a couch, not a coach. Although if I'm playing, it will be coach. But a couch co-op game, which means you have to be sitting there in order to play together. So, but you can fool it to thinking that the other person is there, obviously, with their share play. But The problem is it's an older game, so it's not built for that. And so that's the deal on that. So we'll see if we can do that. If we can't, we'll find another game to start playing pretty soon, hopefully. I know I've been promising that. And I know Tina Share, Queen of Sheba, would like it to happen because she misses Bella. I miss playing with her as well. We had a great time doing, of course, go to the video gaming playlist, and we did 13 streams to do a full playthrough of It Takes Two, which is a fabulous, fabulous co-op game. We enjoyed it very, very much. Let's see. And let all my plugs. Oh, I guess I can do my plugs again. Email me if you got any questions at all. CoachSteveMoney@gmail.com. Be happy to answer them about financial coaching, about scheduling a free consultation assessment, about anything going on my channel. Instagram and Twitter is Coach Steve Money, no spaces. If you'd like to donate to the channel so I can make it better, paypal.me/Coach Steve Money. And let's see, let's check the chat. Video was frozen, but now here I am. Okay. She went to McDonald's to recharge her phone and use the Wi-Fi hotspot. Oh, recharge the Wi-Fi hotspot as well. John Bryan State Park. I do not know. Do not know where that is. Never heard of that. But speaking of Ohio, let's do the Ohio. Back to the day. And let's see. Ohio, the Ohio area was first explored for France by Robert Cavalier, I believe, Caveleier. Sieur de la Salle, that's probably his title. I don't know what Sieur means, sir, maybe. In 1669, the Ohio region became British property after the French and Indian Wars. Ohio was acquired by the United States after the Revolutionary War in 1783. In 1788, the first permanent settlement was established at Marietta, Ohio, and that was the capital of the Northwest Territory. Alrighty, so apparently there will be a live Ramsey show tomorrow, or a new one anyway, for the video. But there will be a new show tomorrow because George is hosting. He's scheduled to host Wednesday and Friday, so apparently not taking the whole week off over there. So we can probably it would be Dave and someone else. Maybe Christy. Unless maybe Dave will take one extra day off and not be back till Wednesday. But we don't know. It could be anything. You can do what they want. He worked like he wanted. Or he worked like no one else, so now he gets to work like no one else. So, which means whenever he wants to. Alright. Alright, well, I appreciate you. Again, thank you so much for making 1,000 watched hours happen. Thank you so much. I appreciate it. If you have not, please like, subscribe, hit the notification bell, and if you've done all that already, you're the best. And I appreciate you. You're the one that makes this happen. I can just talk and try to figure out how to make the technical stuff work. And like do some research and read stuff and talk about stuff, but you guys are the ones that make this happen. So I'm deeply, deeply indebted to you, and I just got to get the subscribers up, and then maybe I'll be able to make $20 a month off of it, which that would be fine. When I get some time, I'll take a look at somebody a channel that I used to watch called Explore With Us, which I still watch when they do a certain type of video. But Explore With Us, they showed their monetization, and so I'm going to look at that and find out like how many hours watched that is, and try to extrapolate that to what I would get for like the bare minimum of $4,000 a year, and see. It's probably not going to be much, but any money for me running my mouth is excellent. And so yeah, so once more I appreciate that. Thank you so much, and make smart financial decisions every day.